If you don't understand this accounting concept in EMS, then you're going to struggle in grade 10, grade 11, and even grade 12. Because topics like capital contribution, drawings, income, expense, profit and loss, owner's equity, they don't go away. Instead, they get more difficult. And in today, I'm going to break them down step by step so that you can understand them now and be ahead of everyone. Are you ready? Now, welcome to grade 8 and 9 EMS RMH Academy SA by me, the relentless Monama Humphrey the man, proudly powered by RMH Academy of Business and Finance Pty Ltd. And in today's lesson, we are going to simplify one of the most important accounting concepts that you must understand now before you go to higher grades. Are you ready? Let's get done with it. Now, I'm going to share with you this important concept, and I'm going to share with you at least 12 of them. And number 1, capital contribution. Now, what is a capital contribution? Now, capital contribution refers to the amount of money that the owner deposits into the enterprise current bank account in order to start a business, right? Number 2, drawings. Now, drawings refers to when the owner of the enterprise takes money or something else of value for his or her own personal use. Number 3, receipts. Now, receipts refer to all money received by the enterprise and deposited into the enterprise current bank account. For example, rent income, capital contribution made by the owner, and payment received from debtors. Now, you need to understand that the receipts affect the assets of the enterprise because the bank and asset account will increase because of receipts. Number 4, payments. Now, payment refers to an amount of money either drawn by check or paid out in cash to pay, for example, salaries, telephone, wages, etc. Now, you also need to understand that payments affect the assets of the enterprise because the bank and asset account will decrease because of payment. Number 5, transaction. Now, what is a transaction? A transaction refers to an action whose monetary values are recorded into the enterprise's books. Transactions affect one or more elements of accounting equation by either increasing or decreasing. Number 6, profit. Now, you need to remember that the main purpose of the enterprise is to earn a reasonable profit and maintain a sound financial position. Now, from the accounting perspective, profit refers to a favorable excess of the total income earned by the enterprise and the total expenditure incurred by the enterprise to realize income. Number 7, loss. Now, loss occurs when the total expenditure of the enterprise are more than the total income earned by the enterprise. Number 8, owner's equity. Now, what is owner's equity? Owner's equity refers to the interest of the owner, and they are represented by the amount of money or something else of value that the owner invests as capital contribution. They are also represented by the amount of money or something else of value that the owner takes for his or her own personal use. We refer to that as drawn. It is also represented by the profit or loss that the enterprise shows for the period. Now, here are the most important aspects that you need to understand about owner's equity. And that is, number one, income increases owner's equity, but expenses decreases owner's equity. Number two, when the enterprise shows the profit for the period, the owner's equity increases. But when it shows the loss, the owner's equity decreases. Number three, there are three equity accounts relating to the owner, and that is capital and drawing. Number 9, income. Now, income represents the monetary value received or receivable by the enterprise. Now, you need to remember that income affects owner's equity because owner's equity increases by the income. Number 10, expenditure. Now, expenditure represents monetary value paid or payable by the enterprise. Now, expenditure affects owner's equity because owner's equity decreases because of expenditure. Number 11, assets. Now, what are assets? Now, assets refers to all positions of value, of monetary value for the enterprise. Now, assets are divided into two, and those are, number 1, current assets, and number 2, non-current assets. Now, what is the difference between a current asset and a non-current asset? Let's start with the current assets. Now, the current assets refers to items that can be converted into cash within 1 year. Non-current assets refers to items with a long lifespan that are bought or purchased by the business in order to run a business, not to resell them. Right? Now, that is the difference between current assets and non-current assets. Now, the following examples with regards to current assets are found. And number 1, trading stock. Now, trading stock refers to the goods that are bought by the enterprise in order to resell them at a higher price. And number 2, debtors. What are debtors? Now, debtors refers to people who buys goods or services from the enterprise on credit. They therefore owes the enterprise money. In other words, a debtor is a person who owes the business money. Number 3, a bank. Now, bank refers to an amount of money deposited into the business bank account at a particular financial institution. Number 4, cash float. Now, cash float refers to an amount of money kept into the cash register in order for the customers to be given change. You probably heard of people saying, I don't have a change. Do you have a change? Can you give me a change for 100 rand? So what they simply mean is that, do you have enough cash float to change this? So cash float in simple terms is a change. Number 5, Petty cash. What is a petty cash? Now, a petty cash refers to an amount of money that is kept into the enterprise premises in order to pay for small items. For example, an enterprise will withdraw a minimum amount of cash and keep it inside the enterprise premises in order to pay for a small item. For example, if maybe a bulb bends, they can just take from the petty cash and pay. So petty cash is where they pay for things in cash. It's an amount of money that is kept inside the house. For example, think of a petty cash as just like a wallet. You probably see someone at home who has a wallet. So normally when they have their wallet, they will have a minimum amount of maybe 1,000 or 1.5, right? But you'll find that that person has got 15,000 in the bank account. So that wallet, think about the wallet as petty cash. It's just a wallet to keep a small amount of money to pay for small item, maybe for bread, for something. If maybe a sugar get finished in the household, they can just take from the wallet and pay. So think about the wallet as a petty cash. Are you with me? And number 6, savings account. Now, savings account, we're talking about surplus funds that are deposited into the enterprise savings account. Now, those are examples of current assets. Now, the following examples are also found with regards to non-current assets. And those are, number 1, land and building. Now, a land and building, it's a premise and the land bought by the enterprise in order to run the business, right? So it's just a building and the land that was purchased by the business in order to run the business. Number 2, vehicle. Now, vehicle refers to all means of transport bought by the business or the enterprise in order to run the business. Number 3, equipment. So equipment, we talk about items bought by the enterprise in order to run the business as well. So examples of equipment, we're talking about laptop, cash registers, tables and chairs. So those are referred to as equipment. Now, those are examples of non-current assets. And before I forget, fixed deposit. Number 12, liabilities. Now, what are liabilities? Now, liability refers to interest that people outside the enterprise have on the assets of the enterprise. For example, an amount owed to someone for goods bought on credit, right? That is a liability. Now, liabilities are also divided into 2, and that is current liability and non-current liabilities. But what are the difference? What is the difference between current liabilities and non-current liabilities? Now, let's begin or start with current liabilities. Now, current liabilities refers to debts that will be paid off within 1 year. Those are current liabilities. And non-current liabilities refers to debts that will be paid off over more than 1 year. Now, the following current liabilities are found. Examples of those are, number 1, creditors. Now, a creditor, what is a creditor? A creditor is a person or enterprise that sells goods or services on credit to our enterprise. Therefore, our enterprise owes them money. In other words, a creditor is a person to whom our business owes money, right? That is a creditor. Number 2, bank overdraft. A bank overdraft is when the business spends more money from its business bank account than it really has. For example, maybe a business has got 5,000, but it spends 15,000. So this means the business owes the bank money. We call it overdraft. So overdraft is when the business spends more than what it has in its bank account, right? So those are examples of current liabilities. Now, another example is short-term loan. Now, a short-term loan, it's a current liability. Now, a short-term loan refers to a portion of a long-term loan that will be repaid within 12 months. That is short-term loan. Short-term loan, it's a current liability. You need to understand that when we talk about short-term loan, we're talking about the current liability, because that loan will be paid off within 12 months. It will be repaid within 12 months. It's a portion of a long-term loan that will be paid within 12 months, which is a shorter period, right? Now, the following non-current liabilities are found, and that is loans. Now, loans refers to an amount of money that the enterprise borrows from the bank or other financial institutions, right? Now, these loans normally they are paid over more than 1 year, all right? For example, a mortgage bond to buy a land and building. So those are accounting concepts that you must understand now before you go to higher grade, right? Now, let's make a recap, or let's recapitulate on what we've been discussing. And that is number 1, capital contribution. Owner put money in. Number 2, drawing. Owner takes money out. Number 3, receipts. Money in. Number 4, payment. Money out. Number 5, income. Money earned. Number 6, expenditure. Money spent. Number 7, profit. Gain. Number 8, loss. Shortfall. Number 9, assets. What we own. Number 10, liabilities. What we owe. Now, if this video has helped you understand this most important accounting concept, then like the video, subscribe to this channel, and share this video with your classmates, because this concept will follow you all the way to grade 12. This is grade 8 and 9 EMS RMH Academy SA, where EMS is made simple. Until next time, me, the relentless Monama Humphrey the man, humble and intelligent King Hannibal, the RMH himself, and the accounting subject assassin, I will be with you in the next video, and make sure you see me in that upcoming next video. Until next time, have a wonderful EMS journey.